Well, hello, folks. Top Gun here with you, and I got a good one for you, eh? Well, the toque. We're up in the Great North. You'll get used to the accent, huh? You hoser. Some people should know this skit. No, for real though. Thank you. You're here with Top Gun. My heat might be a little bit low today. So, yeah, I'm back. I'm going to talk to you guys. It's been a while. I threw my back out, so I've got some time off from work, so I can finally make you guys a video. You guys can be, yay, I'm back, and threw my back out, whatever. Get you some time here with me. So, yeah, as you can tell, I've surprisingly had plenty of work, even though the housing market's been crashing. So what are we looking at here? This little tiny thing here. This is the end of the world we're looking at. It's the bond market. Give you guys a better idea here. Let's look at bonds and over time. So 2020, when the massive crash happened and everyone freaked, and then the money printer went off. That was an end of the world kind of moment when bonds start losing their value. The things that tie to treasuries, I've talked to that a few times, and we can go back and see in history. Gonna have to change this to the week mode. Let's take a look at weeks. There's the other end of the world moment. 2008. Wonderful. So, as we can see by that baseline, bonds really went off a cliff. So I was marking how long, how fast. And oh, look, it looks like bonds are improving. We're just reaching oversold conditions in the RSI, so on the weekly conditions. So this is going to be kind of moment to see how bonds continue to react and if they continue to stabilize like they're finally doing as they bounced off this point. So this is not like crypto. Don't just draw a bunch of angles to track, and I haven't really drawn a map for the bond market yet, but let's switch this back to the days. Okay, and we'll see if we can map this decline, bring it down to its sharp angle, and we can mark a few things. So we can draw one of these lines across everything and see that bonds might have broken out from this long-standing resistance. So new territory for them to stabilize potentially. Even if they come back down, the correction might not be as volatile. And if we make a higher low in bonds, it'll signal the strength of bonds if they start coming up from a higher low. And why would bonds do this when it was the end of the world and everything's crashing? Because the market is finally putting faith into long-term equities because the stock market's crashing. So, I mean, you want to look at, I talk about the good reasons or the bad reasons. Here, we're going to toss the good reasons right out the window. We're just going to look at the bad reasons. If you want to see the good reasons, bad reasons, arguments, and watch a few hours of video, Maverick of Wall Street. Several of those videos in the last 2 weeks. But I'm just going to concentrate on my theory that the house market is crashing, that there is a bubble in the car market, that Evergrande and the Chinese real estate is dropped off a cliff, that we are going into a recession. The only question, well, we're already in one. The question is just how bad is it going to be? And if a recession's the case, well, you want to start shorting energy. Notice how it is still continuing to drop off a cliff. It has now gone under. This is where I was tracking inflation to see if inflation was intact. The inflation may be intact, but it's no longer the headwind. When this lost, recession's beating inflation, which means we might see some stagflation. The longer inflation holds on, the worse the recession gets. But inflation is no longer headwinning or winning the battle. This is the and that's not good. So yeah, oil and natural gas dropping off a cliff. We'll see if there's any headwinds left for energy markets when it comes to winter, how bad the winter is and how it affects Europe. But with this, we're seeing, okay, lumber is continuing to drop off a cliff. This is the pace of the housing market. If lumber's not being bought, houses aren't being built. If houses are being built, they need to buy lumber. The housing market's the backbone of the economy. Yeah, this is a recession. How bad will the recession go? How long will it go on? By the time they're admitting this, it's kind of a baseline. When lumber starts to pick back up, the truth is the money's coming back into the system. we're starting to lead out of a recession. It'll take years potentially to feel it in jobs and careers, but investing might have some better gains coming. So I'm starting to think it's going to be like a 2008 scenario, another 6 months of bear market for crypto and everything else is finally defensives are being bought and energy's being given up. So now, okay, bonds, tobacco, alcohol, pharmaceuticals, still defense contracting with the state of things seems to be intact, but a lot of, fast food even in a recession, believe it or not. There's a lot of ways the money will move around now, but big tech's gone, energy's gone. Like certain markets, it's just moving where you trade, and the market finally agreeing that it's a recession, then the normal risk off assets are going to start doing well through Q1 and Q2 as the market is admitting a recession. And the real risk indicator that we're tracking now is the VIX, the volatility index. Here's the crash for 20, when the bonds started correcting, the VIX went up as the market went off a cliff and then slowly bottomed out. So the VIX, when compared to the 2008 for its volatility, the volatility index, it's skipping up. So we've got Powell talking this week, and we've got Powell talking this week. We've got the CPI. We've got a lot of nastiness, I think, coming in the market with reality setting in that, the whole year was pretty much shot. And there's a potential, instead of a Santa rally, that perhaps we might have a Santa crash. We still want to see the moving average crossover on the MACD, not just green impressions on the Instagram, but to cross to really confirm this. But buying cheap puts, it's your last options if it's going to explode. After every trend down, it seems to go up. So the rally has run out of steam, by my opinion. And if we look at the SPX and look at my long term, this is where you short things. And I should have been yelling that out last week. But busy with work. And I'm not a financial advisor. But again, right off the trend line. Boom, like clockwork. Wow. So take a look at the NASDAQ, and that's where this, where I originally was yelling out the pain and it's moved, that was an anomaly in the NASDAQ. So if I shift this line back to correct with the most number of spots, she did go outside the range, but 1, 2, 3, and an outside. Hell, this one might still even be a little short. So we got to find one in the middle. This NASDAQ a little more volatile. So okay, the SPX, the actual line there, and the Dow Jones, well, it went a little further. So the industrial complex, if and probably when the States does continue, the US, because I'm Canadian, but rebuilding the economy means internal infrastructure, chip plants at home. It means Biden getting out of office and the oil companies no longer feeling like, we're going to be completely phased out. Some incentive programs, some refineries, some energy, basically a lot more infrastructure. So we're not relying on China and a whole bunch of other countries to get imports. The Dow Jones, the industrial complex, that needs to be invested in to really get an economy kind of back up. And it looks like some money came in here. I don't understand this enough to comment on it anymore. You can always do your own research. So tracking the dollar index on these macros, we did fall right out of that trend, but the dollar's not necessarily going to gain relative strength again. So I'm tracking here. This is now the nasty line of resistance to worry about, but this is still the long-standing trend. So we're seeing some stability here. We may see it come back to test, and this is where, in March, we'll see if the market starts rebounding in March. This may continue to trend down off that resistance and break under this. We may see the return of stocks. This is looking kind of months ahead in this scenario where maybe we'll see the turnaround in Q2. Maybe. We're seeing more accidents. I think the Fed is still going to keep raising into Q1 before they call uncle. Probably just 50-50, blind until, something breaks right at the end of Q1. And then maybe they'll wimp out with a 25 and then just nothing. No rate increases before they start cutting rates. They're going to be far behind. I don't know. I don't expect the instantaneous action, and they need to gather up more strength to have more ammo to pull it out of the recession. If they don't have the ammo stored up from wrecking everything quickly, then they don't have the ammo to launch it out. Cutting rates won't matter. If they left rates at 0 the whole time and we fell into a recession anyway, it just took longer, we'd stay in it a lot longer. That's where the Fed's got to wreck things, ripping a Band-Aid off. The faster it gets done, the better it is. Yes, it'll look nasty and frightening, but then you can move on. You can heal over it. So, looking at big tech, we can see Smuckers still doing great. Lockheed Martin still doing great. I don't like stocks. I don't suggest investing in stocks, but the market has an impact on crypto, so I track it. And some people like to diversify. So maybe this is valid information for you to know that some things are doing okay in this market, like Lockheed Martin paying dividends. Oh my God, so many dividends. And look at the stock going up because people are chasing those dividends. And Smuckers defensive, doing great pricing power in this recession. Apple was, I did say people close this just in case if you're nervous. And I think I said if you're nervous because, look at that. Still, all 3 of these shorts would be in the money if you have these still all open. Ouch. And the pain's not quite finished because Apple has had plant closures in China, lack of sales on the new iPhone line, all sorts of problems are creeping up for them. Oh, and Elon's going to war with them because he doesn't want to pay the iMob. It's 30% extortion fee. I mean, the rent. They just want the rent. I don't know. Did you used to watch The Sopranos? Huh? Yeah, the rent. I like that. The rent. They're always for the rent. They have a corner on the market. Google Play doesn't do this. No one, Android does not do this. But iPhones are a status symbol. You have to have an iPhone. And the moment you do, every single app that conducts any business on there, Apple takes a 30% cut, or that app doesn't get to play on there. Isn't that kind of creepy? Yeah. Like a mob, like the iMob. The rent. Watch The Sopranos and think of Tim Cook as Tony Soprano, and a few things might make sense. And a chance of meatballs. Even though Corey's Twitter has been removed over and over, Mr. Meatball is having me on his channel. I think his channel's still up and going. I think the 17th. I'm supposed to guest on there. Luckily, he has Telegram, and I can talk to him there. Hopefully, we can get him an account up and going. I know he talks like my grandma used to, and my grandma said some really sounded like endearing things, and so I repeated them a couple of times until I repeated them to the wrong person and got an hour-long lecture and just counted my blessings for not getting beat up for what I just said. Now I'm knowing what it actually meant. So Corey talks a little bit like my grandma, but I mean, all in all, he's a good guy. He does wonders for the community. And yeah, I don't agree on some of his opinions, but yeah, I don't think he said anything really offensive. Apparently he alluded to how someone should have been punished for their crimes, and it may have been a procedure you would normally have performed to your pets, so you don't have unwanted litters. Whew. So yeah, that was a little extreme. But still, I've seen people say worse, and their accounts are still around, so don't know what's going on there. But yeah, Apple, I know what's going on there. They're in pain. And Tesla. Tesla is too. And right here, I don't think we're seeing a lot of hope. Tesla, you might lose this very important line. It used to be another number, times it by 3 before the stock split. Uh, well, that's 500. Okay, so $500 was a very important line going up, and this is $500, 167 on the way down, which is still very important as a line. I should draw it and extend it a little bit further, yeah. So welcome to the Great North. I'm gonna talk Canadian, eh? So yeah, look at that. That's a critical line, and Tesla is also taking quite a beating because Elon has a lot on his plate trying to run what, 4 or 5 companies. I'm even losing track. Ooh. But then we get into the bond market. So I really don't think bonds are going to continue to progress any lower like that, and I don't know a way to track where they rebound from time. So I'm just waiting to see how the bond market cracks down and then how it proceeds from there. I'm expecting maybe an ABC pattern that traders would want to see. I'm not going to trade on it. I mean, it's bonds. We're talking about the changes, like the change from here to here was 4%. We like crypto because we talk about these and we're usually looking at 400% or at least 40%. Yeah, so it's not like I'm going to go in here, but bonds stabilizing means the world's not going to end, and this is not the boom where the dollar falls apart, and that there is going to be another bull run. So, okay, we do want to see that happen. We're going to have to go through the pain and go through all the stages. As much as we might want to skip to the end, we're going to have to go through. The other confirmation, silver and gold, the old man in the room. Look at them rebounding. Oof, now that is a sign of recession. Because finally, even with the oversupplied futures markets, bam, we're finally seeing a normal risk-off approach. Lumber going down, gold going up, heading into the recession as bonds correct. This is, for my friend Lee Lag, this is awesome. So, Michael, I'm glad you are getting what you're hoping for, but I don't think this means good things for crypto right away. So, I'm angry about it still. Way to go, Michael. Not so good for us over in crypto land. So yes, we have made a little run through, but interestingly enough, copper has still been surging, which is an element of building. So copper is used in electrical wiring, in housing, and in other things. So we're still seeing manufacturing sectors trying not to fall right off a cliff. But if copper drops off like lumber, I wouldn't be surprised if we see a correction or a double bottom back down. But if copper keeps going up, we might be coming out of things faster than I think. Soft landing-ish scenarios. We'll keep an eye on copper. But it's not as important in these indicators, in my thinking. Now, Bitcoin. We've seen, we got past major stands, but all right. Yeah, we pushed out off of this and set a new line at this one, and we've even pushed out from that. Traditionally, crypto bear markets have only ever lasted a year, so many traders are impatient and probably, timing-wise, willing to go back, even if not price-wise. You got two different mentalities forming here because the money printer's not on. You're missing part of the market, but part of the market is trained and key to go to this. So what's the rest of this bear market going to look like for 6 months? Could crypto start to go and forget the risk on asset and start to act like risk off and really start to act like an inflation head? What's it going to do over Q1 and Q2? Not entirely sure, but I'm expecting sideways action. I think that enough of the market is going to be waiting for Bitcoin to hit 11K and pray that it won't be able to go up. But I think enough of the market is like, well, bear markets only last 12 months, so it has to be over. This might not get below 14K. Wouldn't that be funny if the 11K at prey moved up to 14K because of the length of time this bear market has taken and some unusual circumstances? I mean, history rhymes, but it doesn't always repeat. Just because it's always had an 85% correction before, it's never had a double top before. there's so much extra buying in the system, micro strategies, larger industrial complexes that don't want to give it up and can take loans. And this is where artificial actions to the market, I don't know. I have no idea. Technical analysis is useful to a point. In some cases, it shows me important times and a probability that something at an important time might go in a certain direction. But most of the day-to-day stuff, like when Hex bottomed and I called it to go sideways, it went sideways, and I'm kind of, because I don't think there's any, giving you my arguments. Like, the market is confused, and it may just go sideways because of confusion between 22, well, I don't think, no, I wouldn't be surprised, between 19 and 14 for another 3 to 6 months. Just, we don't know what's going on. This has never happened before. And the financial actions, conditions, the Fed will finally turn around because enough recession, yada, yada, yada. Everything will definitely pick up then. The question is how far will it go before? Bitcoin is kind of like gold, the old man in the room now when it comes to crypto. Now, Ethereum is setting the actual, much like when I look at the SPY, like this is the trend that matters. So Bitcoin isn't leading anything. It's a lag indicator. It's following other things in the market. That's not as important. So Ethereum looking more of a lead indicator as we're staying perfectly in my little channels about to see what's going to happen here. Does the resistance or the support win? Which way? Out of my little bull flag. This is an important moment building here. Sometimes they get important. In this, we're going to see a lot more pain or potential for hope. And what Ethereum does, I think, will drastically affect Hex at these points. I think we're looking into early Q1. We're going to start seeing some real action in Hex. Altcoin season potentially before the rest of crypto. I'm still hopeful. We'll see. I could be wrong. I've been very wrong on all of my hope for Hex. Yay, bear market. Of course, the perpetuals and associates will all do in kind, except everyone hates their meme coin. Wait, what? Some people are like, I sold mine for Hedron. Well, guess what? I own Hedron, and I got my free claim. And then I bought one token because I heard there was a rumor that it might be some extra thing going around from this creator if you'd even bought one. So like, okay. And, it's gone up. Like, this is incredible to me, this meme coin. I hate this thing. It's stupid. But it's better than actual Dogecoin. Yeah. I have no idea. I would not say to buy. This is normally be the point where, wow, a triple top. I wouldn't be surprised if there's a collapse. But if it gets over here, it may have a run. I don't know what this is doing. It makes no sense. Because it was falling through here. Like as far as I understand, you can't burn Pulse T anymore to make ASIC. So that's done. So Pulse T is just all by itself now. And ASIC and Pulse Bitcoin are their own things. Pulse Bitcoin. It opened at $30 and then it fell hard. There we go. And then it fell hard, potentially making that opening bottom. We'll see what goes on. $3. I can't believe I'm involved in this. I'm ashamed. But at least when I look at my free claim with Pulse T, when everything else is red, I'm like, well, that feels a little bit better. My portfolio can't be entirely on fire. Something's afloat. But I still hate you. But that's the logic. You should own something you hate. Because when money's not going into the one you like, it's probably going in the one you hate. There's a weird logic to that if you're going to diversify. I don't know. I'm not a financial advisor. This is what I've been doing for me. I did not buy any of this. I free claimed it. And I just didn't sell it. I bought one token. I literally bought one token. And I did it at a lower price. I can't recommend this to anyone. But the technology is kind of interesting. You make your own ASIC miner, and it's a digital smart contract. You don't run any hardware on your computer. You just show up 30 days later and make sure not to forget about it, pay your gas, and reset the thing, and pay a little fee of the ASIC service. Like, it's kind of interestingly, Like, I mean, Tamagotchis, okay? Tickle Me Elmos, Furbies. A lot of these things, really, in the grand scheme of things, not all that useful. I hated these things. But you know, people paid lots of money for these things because they thought they were fun. And I guess some people seem to think this is fun. Go fun. I'm not against fun. I just try to practically invest, but I get slapped in the face for that. It will work. The strategy is tested and true. It's just, whatever. And then the weight claim. I thought it had a bottom, and then I guess it pushed a lower bottom. And I mean, really, as you zoom in, it pushed the lower bottom, and then it's holding here now. I don't know. It is what it is. And here, this is my hope. This is my hope in all of these arguments, which is going downhill right now. B&B is my hope. Oh, God. Things are bad when Binance is your hope and CZ is your hope. I think the U.S. is going to do charges for money laundering and avoiding sanctions against them. This is not good. Not good at all. Before that, I was looking and, I had to move the resistance line to this new peak that's been set. So it's a weaker resistance now. This had run right up, and then FTX exploded and all that war. The markets got more unhappy, and then it still ran up again. Like, we don't care. And she's agitating down, and this is usually about the point last like this, and through bang, and end up testing out the rest of this flag while we're running out news into Q1 about all this stuff with Binance. But I was looking like will it continue to hold this bull trend, this weaker one? Very hopeful on this set off here that we have not come down in this range, but it's not a guarantee. This is not some multiple point holding. None of these bull trends, well, this right now is holding 2 points. And this is a point here and then way back in time. So I'm 2 is a coincidence, 3 is a pattern. I don't have a pattern. Without a pattern, it's not strong. It's just hope. It might as well be a car held together by hope and duct tape and bird crap. It's hope. All right. I really don't know, but the market is admitting risk off, so we're gonna see. We're gonna see if crypto continues to act like big tech and a risk-on asset and gets beat up, or if it's going to trade more like a commodity or a inflation hedge. And then I'm over the kill and interested by this. This launched in November last year. 1 year of 1 point, 2 point, 3 point, 4 point, and 5 points. Like this big, thick green line that's not being broken. Okay. Well, it's not going up very quickly, but it's insisting that this is the bottom baseline. Anything near it, like this is right now, if you're interested in this project, is probably a really good point to buy in, because you'll feel good knowing that it's probably going to go up in future value over time. And when it has these peaks, if you really want to get out, might have been a good time to get in. Now, there's no guarantee in the future. There are 1,500 holders of this now. Obviously, I'm heavily invested. I like it. I'm so intertwined with KG being a friend now at this point, talking to them and being an admin in the chat. I should be considered biased and an employee of the company, even though I'm not. But I should be. All right? So let's just chalk it up and say I am biased. Okay? So I have emotional prejudice and bias in this project. Okay. Now, if you want to continue what I have to say, you can listen. So, yeah. I am... Up and through this first point was a vote to burn system. Then interest because it became a buy to burn system. And this peak was basically the last rattle off as it had a sacrifice, and the last great rally was happening in the bear market. And then this was the summer rally, and this pretty much the winter rally, and then some free claim things, some other whatever, just fighting the last resistance out before She wants to break up and say, fine, we'll give up on this, because the resistance line has been moving. It used to come and slice perfectly across multiple points right down here. That got broke. So this is the same, an extended peak where it's possibly changing its mind. Because will it break the resistance again like it did here, rather than break the bull trend, or will it break the bull trend finally? People will finally sell this thing off like, well, they've gone into beta testing. All sorts of things are launching with this project. They switched to a buy and burn, like Paul Sachs. I got math behind it. It's little buyer berry, because yes, there's a lot more users and involvement and investment in Paul Sachs. So I expect it to get a lot more use and a lot more buy and burn. However, users appeared for this a lot quicker than I thought as soon as the beta was out. So the beta test is already getting used. The security audit's not done. But the one token that you can get now, you're going to get free copies of it on Ethereum, on Pulse, if you own it before it gets copied, because the token is getting forked by the devs onto other chains. Cool, I like free copies. What else? A buy and burn. The wallet's going to use swap fees to buy up the price and burn its shares so it can never sell the price back down on you. Only other investors can take from that money, people holding the token. Gee, that sounds pretty good to me. Okay, and they're launching, after the audit, the dividend paying token. So if you've gotten in on this sacrifice, you can get part of the swap fees paid directly to you. So you can choose to get paid by dividends, or to get paid by buybacks, or both. It's stocks masquerading as crypto. It's awesome. And there are still over 2 weeks left to this. I would not normally go on and show this, but I love this project. But like I said, I'm biased. I like buy and burns. You know how I like my buy and burn math. Yeah, I do like buy and burns. So I'm biased to anything that's going to use a buy and burn. And these guys let me rant at great extent, like you, my viewers, do. Thanks for tuning in. So yeah, this is basically the first sacrifice, which they ran at a better time, and the second one. So the one currently running, which means right now they have sold, less than 10% of the pool, I think, or just over 10% of the pool. Which means there's a lot of pool left to get. The sacrifice cap on this one is 12 million, not 1.2. It's amazing that people aren't in this, but whatever, they'll be able to market buy later. And oh no, the team has 90% control. Well, that was the market's choice. They put the tokens up for sale. Market chose not to buy them. It's not like they're hoarding them. Not willing to offer it till after the price goes up or something. Like, no. Fair entry given. Not taken. I think those swap fees are going to end up adding up faster than I thought. And I have no way to calculate what that speed is going to be. Just once we can see that speed, what that's going to do. But it's amazing. A 2-token system that mimics stocks. The one that pays dividends, the way the math works, it has to be a fixed supply, so you can't buy them and burn them. That's why you need to have a separate token for buybacks and to do what Paul Sachs is going to do. It's that simple. 2 tokens, and you get a copy on each chain. So every chain that WD is going to launch on, IM has to be on that chain. So when they're ready to launch their dividend-paying token for the wallet on that chain, and this sacrifice covers every chain they're going to launch on. Ethereum and Binance right now, because Pulse Chain, that was the first sack. This one covers Ethereum and Binance, but it also gives you a placeholder token. A future in other chains. And if you don't want, you can sell that position. Or even better, you're not tied to your wallet with the sacrifice anymore. If you want to move wallets, you want to change your wallet, or it's something paranoid that might be contaminated, you just got a new hardware wallet, you can move a token that the sacrifice is pinned to, not the wallet address. So yeah, the tokens can now be moved wallets, so you receive the sacrifice to whatever wallet is holding the tokens. That's awesome. Not quite yet with the sack, because you have to use a wallet to sack for this, and then get this sack to your wallet, but that'll include that token. Once you have that token, from that point on, everything goes to that token that they build, this team makes around this wallet and the WD token. WD token launches on Matic. Well, you're holding your placeholder token. You get that airdrop, even if it's 12 months from now, if it's 12 days from now, if it's 12 years from now. And you want to sell that to someone and let them speculate on what it's worth. Some people are interested in that. I just like the utility. You know how I'm a utility kind of guy. 17 days left to get in on this, and they don't need to. The first round got them what they needed to get this job done. The second round is for extras right off the bat. If they don't get that extra fundraising, it don't matter. They'll make plenty of money off the swap fees from this wallet. And if people only buy 10% of the supply, well, or 20% of the supply, I guess that means 80% of the fees on every single chain they launch on will be theirs. Because no one thought enough to buy it out from under their feet. Oh well. I think that's interesting. And I'm watching this go, and they've even added a couple things that they're accepting on this. So some ideas after they're launching on here. Which change might they launch WD on next? I don't know. They haven't said. What would be any indicator? I don't know. That's all, again, speculation. I might be biased, but I don't actually have any inside information. I just speculate quite often and irritate them by somehow guessing what they're going to do, because they're probably right now watching this video going, God, we haven't told anyone that. Stop bugging our office. I'll be like, well, I didn't know. I just assumed because it was on your accepted list that maybe that's the next change you're working towards, since you want some funds on those chains. It's a guess. I guess a lot. I guess they're educated guesses. Tee. So, sacrificing for the freedom of time. If it pays you dividends, get more time on your... More money, less time, you have to work. That's kind of the thing. I don't know. Everyone's got their gimmicks for it. We'll see. If you get into a sacrifice, just know. Talk to a good tax accountant. Apparently, the CRA, the IRS, they have ways to treat these things. They have decided how they want them to be handled, and if you're going to argue with them, you better have a really, really good lawyer, or just find out how they want things done and not argue with it. It's usually the easiest way than changing a law, because I'm not suggesting anyone break the law, but if you get a good lawyer, you can look at ways at changing the law. There are things called lobbying. There are normal, within the system, ways to make appropriate, positive change to your society. There's also the cypherpunk way. So anyway, yeah, I should be careful what I say. I'm in a mood, all right? I haven't been around for a while, and I'm sorry about that, guys. I had a friend die, unfortunately, and I had to deal with that. I also, as I said at the beginning of the video, threw my back out, and I have been swamped with work, and it's a bear market, and there's not a lot of good news to come and give you hopium. And we're getting back to an important time to watch, as I think this week is going to set the mode for the next couple months. Definitely for the next 6 weeks. I mean, the FCOMC minutes meetings are pretty much right in the middle of where everybody keeps deciding up and down with the market. So I think the market at this point has the 50 priced in, and that's all fine. What matters is what Powell says, and then what all the rest of the zombies say. What Mr. Blunt and Mr. Bullard come through, and well, Mr. Bullard is Mr. Blunt, but anyway, yeah, whatever all the other vice president chairs, like, oh, I'm the New York president, I'm the Powell matters, but they all have voices, and some people listen to them, and depending on how they come out, and often they'll almost all be talking in unison, and then one will talk opposite of that, and it'll throw a wrench in everything. So We're going to see what the talking heads say through this week and how the market reacts, but it's going to be more on the words that come out of their mouths as they're trying to anticipate the future than it is going to be about what actually happens this week in the meeting, I think. The only positivity we're going to be looking at, I think, is probably still a lower CPI reading. Not because inflation is moving down for the good reasons. The hypothesis is we're in the bad reasons territory. So it is what it is. The Fed should have been tightening rates faster. But at this point, going up higher than 75, like, the financial accident's already here. They've done their damage and gotten their ammo. I think going 75 to full point fighting would be wrecking ballingly bad. However, if the CPI keeps coming down, we get another 50 and another 50 in January, there might be a way that the companies push off, still hoping for that pivot, and then we might see a higher CPI reading. And if we get an increase in rates again, like if it goes back from 50 to 75 for any reason, I do not think that is going to go well. We'll see. So I hope I haven't scared the bejesus out of too many of you. All right. Maybe this is one of those episodes where I need to find something really cheerful and steal it off of YouTube to show you. I don't know. It's a bear market. But in this, like I've said before, let's go have a look at Netflix. Trading at 300. It crashed ahead of everything else. And as I said over and over, especially once we made it out of here, I'm like, I think it's had its maximum pain. And it's had its maximum pain. Even if the whole market falls apart, I don't see it breaking under the 170. I think they've restabilized, remanaged their money. The growth in this has been a little more stable and slow as people have hedged into it while they're coming out of the others. Like it went first. The money doesn't leave the market, it moves in the market. So this is where, Apple and Tesla, the big caps, lots of trouble ahead because they resisted falling. Netflix gave up early, and now it can move on. It ripped the Band-Aid off quickly, and now it can go. To me, this makes really a lot of sense. So, and it seems to be playing out right before everyone. So again, if it's had its maximum pain already, what does maximum pain look like? Falling down below and faster than all of the trend lines. If it's at its maximum pain, it may be a safer investment. However, this is where Bitcoin, strangely enough, but however, Ethereum is becoming, Ethereum and BNB are really my lead indicators in crypto right now between the two major markets. But altcoin season, that's where all year, all bear market, this is a bull trend. This is a bull trend that went from, how many zeros is that? 8 zeros and a 9? It's 10x'd over the last year. Well, I guess we're at 8.5 today. Right now, it's particularly low at the moment, in my opinion, because I think anything under this blue line is a stupidly good deal, because I'm pretty sure that our future exists above this blue line. I'll even make it that thick because I think it's that important. And I'm biased in this, but an entire bear market, and this thing's only moving up. It's such small liquidity. The smaller projects that are building slowly right now are going to have room to grow, while the already invested projects are coming down still a little bit and in their pain. So I'm still hopeful about Hex starting to crack off soon, having another altcoin run after this bull trend, it'll be established as a massive, major, like Bitcoin and Ethereum. I don't think it will be able to be considered an altcoin after this bull run, but I think we're still going to see altcoin Bitcoin bonanza as we're breaking gatekeeping out of it. It's my hope. And I hope that that has given you guys some ideas to whatever you're planning for the market. If you were planning to buy a boat or a house or planning to wall all your money into gold in the wall, now maybe you have a better idea looking at the market whether you'd rather have some Lockheed Martin or whether you'd rather have some gold like a leprechaun or whether you'd rather have some digital gold and get some hacks. I don't know what the hell you want to do, and I'm not going to tell you which one of these is a better choice because I have no idea what's going to happen in the future. I say that quite regularly. I'm also not a qualified financial advisor. I just love patterns and numbers and math. So apparently I do good TA. Not that I describe it well, but I do see the patterns and I do call out the moments of importance. So far I'm getting a pretty good braggable track record. It's not 100% perfect, but for a beginner, I think it goes beyond beginner's luck. This is over a year now. I can't call this a beginner anymore. I mean, yes, this is only less than a year. I've been on telling you guys. You've got to watch me learn this. But I started. Yeah, it's over a year. I've owned Hex now. I've been in crypto over a year, guys. And thanks for making it all the way to the end. You get a gold star. I don't think I have anything more useful to impart with you. Yeah. Just the market at a snapshot, and defensive long-term investing seems to be the motif. Risk off. And, gee, the risk in IM, doesn't that look low for what it is for crypto? Like a company making its stocks and reasonable growth without being listed on a major exchange, without having one of those coin market cap listing pumps. It's pre-exchange. It's so pre-viral. 1,502 holders. That's what they got today. Still remember, there's less than 10 trillion tokens. That's 420 trillion. There's 9 trillion. So just get rid of that 42 and make this 0 and 9. Alright? There are a lot less tokens than that. And they will continue to go down as the buy and burn works. But yeah, 1,500 holders now. I've been going on about this. Like, I remember when it was before 1,000 showing you guys. Like, they've had some room. Unfortunately, this wick, not gonna lie, one last thing. They got a system in place for the free draw, free claim. And this is, I think, brought a little bit of negative FUD scrutiny. But they had a system in place that should have kept it safe. And then they had a all Hail Mary, it shuts off if something breaks. And someone managed to manipulate it. They managed somehow to index phone number after phone number after phone number and claim them. I don't know how they were generating these phone numbers or doing the authentication with bots. It's not impossible, but that would have been a high level, and it went off. A lot of effort for very little amount of money, in my opinion. I mean, you can see this is what's in the liquidity pool to even get out, 27,000. I mean, this is enough of a chunk of change for some people. So the free claim took a hit because we were looking at breaking that line there, I think, and that was some unfortunate timing where the free claim took a hit and a few other things went off. And then, well, we've reset, regaining momentum. It's fine because I really, really believe in this bull trend, which means if we're going to break this, which is a 5x from today's price, because I believe in this project making an all-time new high eventually, and we're not going to go under this green line, and that green line crosses that blue line by the time we get to May, and we're just under the blue line right now, wouldn't that be the most epic purchasing time ever to DCA? Well, that's when I DCA. I bought at the bottom of this wick, but I went heavy, and I'm saving right now, and I'm guessing that it's going to fall just a little lower, and I'm going to scoop it right up, because I have a funny feeling this line, goodbye. And I have a funny feeling, though, that this line, if we zoom in, not look on the macros so much, I have a funny feeling that this is going to hold. That we're rounding into this. We're going to bounce right off it. And this is where I'm planning my next buy. I could be wrong. But I do like my bottoms. I have a funny feeling if nothing rocks the boat, that next week we're going to start seeing this go up. So right now, yeah, I am going to be moving some money to try and buy this Friday because I have a funny feeling Thursday, Friday, I'm going to see another epic little kiss on this line, just like this one and this one. Oh, it went so broke. But oh, that means yeah, everything I bought here, here, here. Yeah, that trick I do in Hex. It's really awesome when the asset starts going the other way. Uh huh. Because with this asset, like I love my Hex, and this is not such massive gains, but yeah, I bought touching that green line a few times, and so something in my portfolio is not at all on fire. Something in my portfolio is green. From where I bought, I'm laughing. So yeah, that's why another reason I'm biased about this asset. Yeah, the thing I hate and other thing I love, the one I'm cheating on my Hex wife with, those are doing good. Hex will do good. I have faith. It's going to turn around. Pulse chain news, a whole other bite. Fed printer back on. It's coming. It's just, it hurts waiting. I have other things to help me while I wait. Don't get in them. If this is all so complicated for you, just like hearing me talk, it was really simple for me in the first. Just stake some Hex and forget it. I don't have to watch these charts. Sometimes when I get stressed out, I think, I have stakes. I don't need a YouTube channel. I don't have to watch these charts every day because I know in the future it's going to go up. And if you have some belief in the future, now's the best time to DCA in. The sooner the better. Time in the market is better than timing the market. I just try to time the market with my time in the market. Like, okay, like I'm not going to do it every Wednesday like clockwork because maybe a Wednesday falls here and I bought a little high and a Wednesday down there and I bought a little low and Wednesday up there, a little high and Wednesday up there. Woo. But buying each one of these lows, like I didn't just ape in all in one buy and call it done and walk away from an asset I like. I didn't go irresponsible. I didn't take massive loans. I spent dinner and a movie because that's what my poor butt with a toque in my own home can afford. Dinner and a movie. And that's what I put into crypto every week or two. And I pick which asset and which one. And this week, we're coming up on this. And I have a funny feeling that the week after, I might get a cheaper price in Hex than 2.6. I missed the other dip because I was a little broke. Like, again, dinner or movie. There's only so many things I can buy. I can't just whip every time I see the thing. So, yeah. Hex will have another buy coming up, I think. So let's take a little closer at that chart. I'll do some speculation here. Not financial advice. Just where I'm hoping, where I'm scheming. Because I love my bottoms. So that spiked too fast and I don't have any limit order placed. I do all this manually. You can also set limit orders and walk away. But when this dipped 2.54, 2.6-ish, that's where I snapped. And I grabbed some. She did dip a little bit lower. There it is. I bought on this one. I did not expect this dip. But after this one and this one, I'm expecting this resistance to continue holding. We're almost in oversold conditions in the RSI. And yes, there we go. So as you can see, we're coming up. We're losing the green impressions on the Instagram before crossing over the moving average. So we're losing steam. And the RSI is dropping off, which means the line of resistance is a lot more profound as there's no real line of support. Like this support, 27, is not enough to hold. So we're going to lose 2.7 cents, which I believe will mean a retest of about 2.2, 2.3, somewhere in this range right here. So I'm expecting a fall down and then correction past this line. I do think, unless there's some massive market reaction again, and there has been repeatedly, right now, assuming no mania or insanity in the market, the TA kind of suggests a motion that, yeah, we're going to come back down. And yeah, so into next week or the week after, I should hopefully have a nice opportunity at sub 2.5 cent hex, I'm thinking. And then we might start seeing our correction. Because once we lose this BS thingy, which we will, but once we do, and we only have this sub 1 to worry about, because all the other down resistance trends, they're shattered. So this one's not that strong anymore. The current one is strong. Once that breaks, this is a pretty weak one. And so I think it'll gather its steam in a bull flag and bust right back out of this one. Probably in the 3 cent range. So probably dip into that line I deleted closer to this green one and come back up. So that's my plan to grab a bottom. And normally I wouldn't see the bottom till we're in the bottom, but I'm starting to see the bottoms before we even get to the bottom. So I like my bottoms. They're the micro trend bottoms instead of the macro, but whatever. So that's my thinking. That's what I'm doing. I am aiming up to try and buy a little bit of this by the end of the week, and then my week after's buy is for my hex. That's how I'm timing it. That's what I'm doing. I could be wrong. That's how I'm going to burn my money. Now we're actually at the end of the show. I knew I had a long one for you folks. I hope you've enjoyed all of that. Thanks for staying till the end. You definitely get a gold star. Until next time, stay frosty.